I'm going to give you three things to memorize that should make things easier. First, retained earnings at the beginning plus net income minus dividends gives us retained earnings at the end. Secondly, expenses are debits, expenses are debits, expenses are debits. And third, the depreciation expense is recorded with the journal entry, debit depreciation expense, credit accumulated depreciation. It may help you to have some context to memorize these things. So retained earnings simply means earnings that have been retained by the company, money they've made that they haven't paid out to their shareholders in the form of dividends. Expense or debits, expense or debits, expense or debits is an easy way to remember the rules for journal entries. We record financial transactions with journal entries. Debits and credits and expenses like rent expense, like insurance expense, are recorded with debits. And finally, depreciation expense is the way we spread out the cost of long-term assets. So if I buy a ink cartridge, I'm going to expense it right away because I'm going to use it up that very month. But if I spend $30 million to buy a building that's going to last for 30 years, I shouldn't recognize that $30 million expense in that first year. Instead, I'm going to spread it out with $1 million worth of depreciation for the next 30 years. So three things to memorize. First, retained earnings at the beginning plus net income minus dividends gives us retained earnings at the end. Second, expense or debits, expense or debits, expense or debits. And third, the journal entry for depreciation expense is debit depreciation expense, credit accumulated depreciation. Just memorize those things and life will be much easier. Thanks.